9/2/2011, 6:01 a.m. Pacific Standard Time, 29 minutes to that opening price action bell. Here we have a jobs report Friday monthly. Here is the gap down list on the NYSE ratio. ESL, there's that CEO, there's that MasterCard, there's that PTR, and then there's a couple of others. And these are good gap down ratios because they can trade up off of that long debit before they, you know how they do it, roll over and make another lower low. So you definitely want to get the long debit. Then when it slides below the previous half bar, and in the half bar column in your platform, if the ratio is going in a higher direction, then that equals a weaker stock price, which support your short sell. And you'll have other various tools that will confirm it as well. So it's going to weight the buyer and the seller, and the volume is the key between who is here today. It's a holiday. Happy holiday weekend to the people. But let's talk about why 60% of the program trade is here. And 1.00 and higher is the SMF qualifier. I mean, this thing is all day long. This thing is all day long. And you can see the names in here. FCX is in here. All right. You know, these are going to all be in various different sectors throughout the day. So we'll be going back through those sectors so we can see where the weighting is. And, you know, we got a major earnings season coming. But next week, hey, September is an asset allocation month. They got the jobs report. They don't like it. That's why that gap down. But look at this gap down. Starts right here, 1.00 ratio. And then I can go all the way up the ladder. The key names like NVO, MOS is in here. These are ratio gap downs. But as we go up the list, we can see FedEx is in here. ExxonMobil's in here. There's various different ones. PCP is here at $1.70. You start getting up in here on that Hess and that OXYO Oxy. You know, these are all listed stocks that are going to be programmed to sell at certain areas on the electronic opening bell. That's where they'll come down and make their bottoms, and then you'll look for that walk that 369 buy action bar with an ascending closing bar above the previous bar. And you would be looking for high elevations in the bid and ask ratio to support the current price print in the bid and ask over here. That's where people make markets, right in here. So we got a big gap down on Google, and it's an options expiration. So I assign certain one of these gap downs, but they're all good. Caterpillar, look at that one. CRM in there. Here, there's your TNH. We have MMTs on that every single day. TNH, gapping down. You got your CMG, overbought CMG, gapping down. Okay, your PTR, your MasterCard. These are the higher beta in the NYSE as far as the way that they're going to trade in the price action. Okay, the higher the beta, the wider the intraday swings will be. Watch that CLF. That's in here, right here. CLF, negative ratio 2.46. Here's the 5-day volume on the names. Wow. Caterpillar's had pretty good volume this week on 5 days. And so has SLB. There it is, -2. All right, listed stocks trade a certain way as well, off the left elbow gap down. We'll be watching how the broader market weights itself between 1, the bull, and 2, being the bear. Once we get the price weighted action between the two parties, we'll understand exactly where we're going to be. Remember one thing. It's an options weekly expiration today. Today being Friday jobs report to go along with it. So we would be looking for a lot of price action volatility, both how they steal the premium, and there's a video. Boy, if you watched that one yesterday on the Google, huh? They're going to be taking all the premium out of the call side on the opening bell. And the put side of the market is going to open up at the higher end of their deltas. And we would be looking at the higher end of the put market. If it starts to reverse rapidly, then that would mean stocks are coming up off that bottom in price action. And it would be confirmed in the SMF platform. It would immediately start ascending in your direction. Then it would have to expand in the teeny action, meaning prices. So if you're expanding a quarter delta, hey, that's nice. And closing above the previous half bars. It has to do that to support a long position. The short position is just the opposite. If you're closing below the half bar and it comes up, you can't get above it, and you're weak and everything, well, hey, price action goes down. And price action weakness builds. Then you have the upside volatility, but the upside volatility to the upside, 3 teenies up or 5 teenies up, then it reverses and comes down and makes a lower low. Welcome to the NYSE, the gap open up list. Let's see. Uh-oh. I don't have one, or do I? Yeah, I have 3. GG, Newmont Mining. It looks like they are your gold stocks. And when gold was pulling back, we were rallying up there for the last days of August. And now the second day of September, we have the Dow Industrial Averages gapping down in the futures 153 handles. And you only have 3 qualifiers, and they just so happen to be a market that you would want to watch, because if they start to reverse off of the opening bell, then that means that the other side of these trades would be putting a bottom in and starting to break higher. Okay? Gap open on the NYSE. On the other hand, gap open down, Jobs Friday's report, trade management, weekly options expiration, left elbow gap down in play. Everything will be confirmed, and you will be able to wait the teeny consolidation bottom